Welcome back to another Money Tip Monday. I'm Lizy Hofer. I'm a residential loan officer here in the Phoenix area, teaching practical money tips to help you make smart home purchases. Today on Money Tip, I want to talk about credit, I want to talk about debt, I want to talk about what to do if you find yourself unable to make your monthly obligations in our COVID quarantine. Now, before I get into all of that though, I am going to need you to like, comment, and subscribe to this awesome channel so you don't miss future money tips in the future. Now, it probably doesn't come as a surprise that millions of Americans are facing the potential of furlough, unemployment, or a definite reduction in income over the next couple of months due to all of this COVID quarantine, the government shutting down, cities shutting down. I thought it was really important to just get this information out there because I also know from doing money tips that there are also millions of Americans that don't really have a whole lot of money in reserves. So we know as part of the SMART steps, right, if you're a fan of the channel, that I always recommend having somewhere between 3 to 12 months in savings reserves. I think 3 is the absolute minimum, but once that runs out, what do you do? And so I wanted to talk about all of the different strategies that you may or may not know that you have at your disposal, and then what the potential credit ramifications might be, and then just your future potential to purchase after maybe doing a debt consolidation or potentially a bankruptcy and all the different things that you need to know. So the very first thing that I want you guys to understand is that most credit card companies, most loans, mortgages included, have the option and the ability to do what's called a payment modification. Now, they aren't guaranteed, and not every single bank has to be willing to take modified payments, but a lot of times you can negotiate a different payment than what you've been normally paying. So I've seen this happen a lot on, with credit cards, with auto loans, and even with mortgages. Now, with a mortgage, you're gonna wanna contact the department called loss mitigation. That's probably the same department that they're sending you to request a forbearance. And I'm gonna link my forbearance video below here too, just because I really wanna make sure that you guys have all of that information. Every servicer is gonna be different on their requirements, the documentation, their standards for allowing a modification, but it is something that you can seek out. In addition to that, many municipalities, and that's just a fancy word of saying like your local city, they also have organizations that are dedicated to preventing foreclosures. And so there's hardest hit funds, which is money that's left over from the last recession that is still available to help people prevent a foreclosure. In Arizona, it's Save Your Home AZ, right? So you want to look out and see if there's any grant programs or government counseling agencies, and definitely hit up loss mitigation. Now, there are a lot of different attorneys that also, say that they can help with loan modifications. Now, from my past professional experience, this was a very costly way of getting it done. And it also isn't guaranteed. Many people had to miss mortgage payments in order to pay their attorneys. So it just depends on how much you want to stay in your home, right? So those are things that you have at your disposal. Now, credit companies, right? So like credit card companies, they also allow for modified payments. They sometimes allow you to change your due dates. They can modify interest. They can modify your limit and make it like an amortized loan versus a revolving line of credit. I mean, they have so many options. So you definitely want to be able to speak to that department. Also note that the first person that you speak to is always going to be a customer service representative. And I'm not bashing on customer service representatives. I'm very grateful for them. But a lot of times they're just not authorized to be able to approve your modifications. So you just always want to make sure that you are speaking to somebody that can approve the actual thing that you're trying to get. And if they can't, I wouldn't be afraid of escalating it, and I wouldn't be afraid of even escalating it again. Now, how does it work, right? So for most credit cards and for auto loans and for things that I've seen, what they'll do is they'll modify the payments for an extended period of time, or they'll defer payments for an extended period of time and then tack it on to the end of the loan. Others, I've seen them shut off the credit, and then give you a smaller payment. And then once you've made anywhere between 3 to 9 payments, right, I've seen them just make that the new standard payment. Creditors do not have to agree to do this, and there are a lot of scams associated with debt consolidations. They normally play at like 2 in the morning, right? Because people that are in debt and stressed out can't sleep. Beware, do your due diligence, because I have seen tons of people spend countless dollars, right, that they don't really have on programs that don't work and ruin your credit. I would never believe anyone that says, don't pay your bills, I'll get this disputed and removed, because that's a terrible plan. Lots of these creditors will take you to court and file judgments, and it'll ruin your credit for such a long time. But one thing that I do like about that whole reworking your modification is that after your modification period, so I'm gonna say anywhere between 3 months to 12 months, right? And we've seen consistent on-time payments, it actually doesn't impact your borrowability, which means like your potential to borrow future money. And that, I think, is the best way to go about this if you do find yourself in hard times. You never wanna just stop paying, because when you stop pay, you're actually showing the bank that you didn't do everything possible to maintain your finances. And I promise you, based on my past professional experience, this will come to bite you in the future with future home loans, with future auto loans, right? Insurance, right? You're just stopping paying without trying to work out any kind of modified payment plan will have ramifications. So what does this actually mean, right? When I say ramifications? Well, first and foremost, whenever you do a modified payment plan of any kind, as a banker, right, for home loans, I'm gonna wanna see that you have made on-time payments for that payment plan for at least a year, right? I don't wanna see anything that is not reporting in your favor. Now, there are some debt consolidation programs that will put you into a whole program. And we're gonna wanna see a 2-year on-time payment history for that. It's like a Chapter 13 bankruptcy, which is also something that you might wanna consider. Now, I'm not an attorney, and I'm just a banker, and I'm actually just a human giving you my professional opinion here, right? So I just wanna put that disclaimer out there. So in my past experience, a bankruptcy will wipe out all of your credit, which makes it really difficult from the get-go, but it allows you to rebuild positive new trade lines and actually come out with a higher credit score than a lot of times those debt consolidation programs, although that doesn't completely wipe you out, right? So you might have a lower credit score after the program ends when you do a debt consolidation program, but at least you'll have a credit score right away, which means that you might pay fewer dollars on insurance, deposits, things of that nature. So that's typically what I have seen in terms of like consequence. When you do a Chapter 13 bankruptcy, again, from a mortgage perspective, we're just gonna wanna see 1 year of on-time payments, and we wanna make sure that your trustee that's responsible for your bankruptcy gives you approval to purchase, right? But again, you can borrow after 1 year of on-time payments, right? Obviously, a modified payment plan, in my opinion, is the way to go. Now, there is also a Chapter 7, so depending on your circumstance, you may have to just file that direction. I'm not a bankruptcy attorney, so if this is something that you're curious about, I'll post a link to some people that I know of in the comments below. But again, like, do your own research on that. Now, a Chapter 7 bankruptcy definitely has longer ramifications. Some programs will allow you to borrow 2 years after your bankruptcy, others up to 4 years. I know in luxury financing it can be 7 to 10 years, right? Or if that at all. So you just want to keep in mind that just depending on the type of financing that you're going for, bankruptcy might prevent you from actually being approved for your home loan. Now, a couple of things that you do need to look up, right? So if you find yourself in a position where you own your house, you have equity, you want to look up what your Homestead Protection Act is. Now, again, I'm not an attorney and I'm not a tax advisor, so I want you to do your own due diligence, but definitely look up your homestead protection information. And then I also don't want you to forget that whenever there is debt forgiveness of any kind, you will more than likely receive a 1099 from the creditor when it comes to taxes, right? So in the short sale days, many people were unaware of this. And so when they went to go file their taxes, it appeared as though they made all of this extra money because the bank wrote it off and gave you a 1099. So whenever there's debt forgiveness, it could mean some major things for your taxes. So you will always want to talk to your tax advisor, your attorney, right? Your financial planner, if you have any of those, right, before you make any major decisions. I've personally been somebody who has been in debt in the past. And so I can tell you that, for me, I am not too proud to go and call and get modified payments. I've definitely rearranged my payment dates so that I could afford, my monthly payments. If I'm focusing on debt strategies, so let's say you're somebody that is gainfully employed right now and you just want to figure out how to get out of debt, especially now that you're not spending as much money, I always focus on the payments that are the highest and try to tackle those first, or payments that have the highest interest, because those are the ones that prevent you from actually getting ahead. Now, I know that there's a lot of successful strategies that teach you to pay the lowest bill first because it'll encourage you to repay. But for me, I always just try to go for the maximum impact to my budget. What's going to free up the most cash flow? So if you have questions about that specifically, I'd love to talk to you about it in our Smart Steps group. We're going to be doing a live on that with my husband and I. So let me know if you have any questions on that. Now, I hope that you never have to watch this video because it never applies to you. But if you do find yourself in a hard place right now, I hope these strategies helped you. If you know of anyone that this video might benefit, please don't hesitate to share this. I want as many people to have the information as possible. I'm happy to answer any of your questions, so don't hesitate to post them below. And again, guys, I'm wishing you the best. Please stay safe, stay inside, be healthy, and try to keep a positive mindset. Until next time, guys, and I'll see you on another Money Tip Monday.